Hey everybody, hope everyone's doing well and had a good day. This is a brief recap of the Emini 5-minute chart for Tuesday, March 11th, 2025. Before I get into the price action, I realized there's something I wanted to mention. When I made a video for the membership announcement, I had different ideas back then when I was beginning to do that, and I don't think I even mentioned in those videos what I'm actually doing currently, so I wanted to talk a little bit about that. I have a membership you can join, and if you are a member of the channel, you have access to videos that are for members only. And in those videos, I do trade reviews. So I break down the trades I take. I talk a little bit about my system and my process and how the day went for me. And that's just extra, so you absolutely do not have to do that. I talk all about the price action of the day here in these reviews, but if you do want a little bit more, I'm sharing things from Systems Academy and my personal trading, so that is available. I just wanted to mention that because I don't think I ever did. So with that, let's get into the recap. So going into the day, small gap down. When there's a small gap, I assume trading range over the Globex session, and I typically just look at the regular trading hours chart. When there's a small gap, I'll still look at Globex, but when I'm trading, I'll look at this chart. And the first thing I'll notice, the rally to 73 at the end of yesterday was strong enough for a second leg. It's a strong trendline break, and it's still a minor reversal. You compare this rally to the sell-off we've had over the past few days, it's still minor, but it's a strong enough minor reversal that a second leg is likely. So when we got bar 2 today, I thought maybe it's a complex pullback, one gap down, two legs down, and then a strong reversal bar on bar 2. Maybe the bulls are going to get a second leg up. Minimum target, the close of bar 73, the high close. So bar 2, it's an outside bar, which is an expanding triangle. It's a trading range bar, so that's not ideal. There's going to be a higher failure rate when breakouts begin with outside bars, and there's a lot of trading range price action here over the past 15-20 bars. So this outside bar is just a warning that there may be more trading range behavior. But the bulls still got their second leg, and it's fractal, so there's a couple of ways to see the bulls getting two legs up here. We rallied to 73, complex pullback, second leg up to test the high close during bar 7. Bar 2 got a second leg after a pause on 3. This is an implied pullback, so 3 sold off to the buy zone of bar 2 and rallied for a second leg on bar 4. And just here, we rallied to bar 4, pulled back 5 and 6, and then 7, this outside bar, again rallied, testing the high close. 7, big enough surprise. Second leg down, likely. Is it leg 3? Might be. 1, 2, 3 legs down and a channel line overshoot. But it's enough of a breakout bar. It's an outside bar. So, again, trading range behavior might be more likely here after bar 7. But traders are trapped on bar 7. So think about the bulls who bought bar 73 yesterday, bought anywhere up here. Bar 7, there was a brief chance to exit longs up here. But if you did not sell, then you're trapped by the close of bar 7. So you have bulls and bears looking to sell a pullback. And that's what bar 8 was. Bar 8 was a vacuum test of resistance. Strong looking bull trend bar, but an inside bar, completely inside bar 7. So we had a breakout, pullback, and a second leg down. The second leg down subdivided into 3 pushes. 9, pause, 12, pause, and 14. So we have 3 pushes down to bar 15. A couple of different ways to see a wedge there as well. So after 3 pushes in one direction, you expect a couple of legs sideways to up. So selling down here, not ideal. We're also attempting to break out below yesterday's low. But look at the breakout attempt. 14, breakout bar, but tail below, and then no follow through. Low one attempt, never triggered. And the bears having a hard time breaking below yesterday's low and getting follow through. 18, another breakout below the prior day's low, but no follow through. 19. And this is sort of a big low one. So bear breakout, pullback, low one short. But think about what happened on bar 17. 17 was strong enough for a second leg. If you're a trader who sold, let's say you sold the close of 14, you sold above 15, you sold for any reason down here, 17 is telling you the price is wrong and traders want to sell higher. So it looks like we have to go higher. 17 is disappointing and it's trapping traders. Bears who sold down here trapped into a losing position on bar 17. Bulls who did not buy down here, they missed a scalp. So you have support below the current price. Bulls and bears looking to buy a pullback. And this is still probably a minor reversal. Tight bear channel, correction. So this is what Ali would call correction mode, where the bigger, the more major breakout direction is bearish. So the market is in a bear regime. Bars below the moving average, bear trend yesterday, big bear breakout today. But again, you can count 3 legs down a couple of different ways. It's a nested wedge. We're attempting to break out below the prior day's low and failing with bar 17. And this is a warning that we might be in correction mode. So bearish, yes, but we might have to pull back and go sideways to up for 10 or 15 bars. So traders use bar 18 to buy. Any trader who sold the close of 14 was given a chance to exit either on bar 16 or 18. If you're disappointed, think about if you're selling here, if you're selling momentum on bar 14 and 15 is your entry bar, you're disappointed. And that's in part why we reversed up on 17, because the sell to close bears on 14 were disappointed with their entry bar 15. If you're selling a late leg, possibly low in a channel or a trading range, you need momentum. And 15 is not momentum for the bears, so they'll use any chance they can get to exit at break even. You sell the close 14, you exit on 16, and that's what causes some of the buying on 17. And in this case, we got another chance. 18, so big up, big down, but 18 is a vacuum test of support. 17 is probably going to get a second leg. Buyers below 17, probably buyers below 15. In this case, we didn't get there. So 20, another breakout that is strong enough for a second leg. Is 20 a second leg trap? It might be. Leg 1, deep pullback. Leg 2, testing resistance. But we might have to go higher. We're not exactly in the top of the range at this point. The top of the range could be all the way up here. If it's a channel, we still probably have to go higher. Maybe the channel line is something like that, the trend line. So another vacuum test of resistance, but strong enough breakout, trapped traders below. 19 is a bad stop order signal bar, so we have trapped traders at the high of 19. We have trapped traders at the high of bar 18, another bad stop order signal bar. Trapped traders at the moving average. This breakout's crossing the moving average and closing above it, so support below. And second leg up likely. We paused on 21, tested the moving average. Bulls got a brief second leg up. But is that the second leg after bar 20? I'm not sure. Usually we get more symmetrical second legs. So what about 23? Is this a reversal attempt? Is this a low 2 short, low 1, low 2? It might be the start of resumption for the bears, but compare the breakout strength of 23 to 20. It looks like 20 is stronger. And we're still, you can see we're testing the breakout point, bar 18 high, where there's probably support. So there might be buyers here. Bears, so 23, strong enough bar, strong enough breakout for a second leg. and they got it. The Bears got their second leg on 24. 24 rallied to the sell zone of 23 and sold off again. And that's sort of the minimum second leg. And now, it's hard to see it on this chart, but there's a high 2 on a smaller time frame. We rallied, we attempted to sell off, we rallied again, we sold off again. This is 2 reversal attempts. Or you could say 21, low 1, 23, low 2. But it's nested, so we have a high 2 here on 24. So there might be buyers below 24 at this breakout point after a couple of attempts down. The bulls getting their second leg up. Now look at bar 27. Is this micro channel strong enough for a second leg? It might be, but we have to dissect a few things. There's context. We have the trend line above, so we're testing resistance. We have possibly 3 legs up, 13, 21, 27. And you might say, is 13 really the first push up? Well, when you watch the Brooks trading course, there's examples of this. You'll hear Al talk about it frequently, where a reversal or an opposite move often begins before the current trend's move is over. So even though 13 is a pullback in this sell-off and the sell-off wasn't over, this could be the start of a bull trend or a bull channel. So 1, 2, 3 pushes up. And 27 is the only bar breaking out above this tight trading range, the bars to the left here. And there's a big tail on 27. The bulls really need follow through. They're also not breaking out above the bar 9 high. There's resistance here as well, the top of this sell climax. We've had, like I said, 3 pushes down, 2, 7, and 15. And it looks like we're testing the top of the third leg. So there's resistance here. Bulls really need to break out above this resistance. And then bad follow through, 28. Still, buyers below 27, it's a bad sell signal. It's a tight enough channel, and it's a micro channel for a second leg. But that second leg could be very small. It could be similar to sort of this second leg on 18. Bear breakout, pullback, brief second leg, just 1 or 2 bars. So 28 is a high 1, but it's a late leg in a bear regime near the bear trend line, so it might be sellers above. And then we sold off down to 30. So 30 is a 3-bar bear micro channel, 3 or 4 bars. We're getting trending highs, 30, bear trend bar, breaking out below the moving average, trapping traders above, and it's in the direction of the overall trend. So 30, high probability we get a second leg down. Pause on 31, but then the bears immediately get their second leg. So bear breakout 30, pause, second leg down. Now we're at the bottom of the trading range. We're testing support. The last time the market was here, we rallied, so we can expect at least a bounce, if not a reversal. But this bear breakout is probably too strong for the bulls to buy. In other words, the bulls need a second reversal. They need a trendline break, a retest of the lows, and then maybe a reversal. What that means is a second leg down is likely. But pullbacks are also likely after breakouts. So where could we pull back to? One area we could pull back to is bar 31. We had range compression here. So range expansion, 30, it's a breakout, then a doji, range compression, area of agreement, but then another breakout. So this breakout, 32, 33, is a breakout of a trading range. We may test somewhere in this area. It also is roughly a 50% pullback. And the strong tool is a little wacky right now. I was doing something with my level 2 study. It's not exactly what I wanted, but that purple line is 50% of this sell-off. So somewhere in this area, there might be resistance. We get a rally to 37. It's a 4-bar bull micro channel, but if you know Ali's 10 plus 2 strength factors and you do the math on this breakout, for me, I remember in real time I did this and I got about 50% for this bull breakout. So there might be a second leg up, but that second leg could be really brief. And just think about the context and compare the strength of the rally to the sell-off. And you can see the tails on the bars indicating that there's sellers above bars, and this is actually a channel on a smaller time frame. This is a spike in channel bull trend, and bull channels convert into trading ranges if not bear flags, so we make a trend resumption. And remember, this breakout down to 33 is likely to get a second leg. This entire sell-off down to 15 was likely to get a second leg. We got a complex three-legged pullback, and now we might be getting trend resumption. Outside down 38. This is trapping traders. You can see we tested somewhere in this area, and there was resistance, and we might be getting trend resumption, a second leg down, 1, pullback, 2. 39, the bulls got their second leg. So we rallied to 37, pulled back below 37, buyers below. 39 rallied and tested the high close of 37. So any trader who bought here, scaled in, they could have made money. But bulls are using 39 as a bar to get the heck out of longs, because 38 is a warning that we may be getting trend resumption after this big bear breakout. Do you really want to be buying this weak bull breakout against this strong bear breakout, especially after you see 38? You probably just want to get out of your trade. So traders sell here, and we start to get another leg down. Now we sold off to 47, and there's a couple problems with down here. Let me back up again. One problem is a possible wedge, 3 legs down, 69 yesterday, 15, and 48. So big 3 legs down. It's also 2 or 3 legs down here, depending on how you count it. If you count spike breaks, bear breakout, leg 1, pullback, leg 2, pullback, leg 3. Even right here, maybe the count resets here on 38, 39. 1, pause, 2, pullback, 3. This might be a nested wedge. There's also maybe a leg 1 equals leg 2 measured move. So there's lots of support here, reasons for computers to buy. So this is not an ideal sell zone, and it might be better if you're short to just get out above a bull bar or take profits and see what happens. Because think about the day structure at this point in the day. I think Brad told me this story, or told maybe my class this story. He talked about Ali asking Al a question, and the question was something like, "Hey Al, is there a higher probability as the day goes on because you get more information?" And Al basically said yes. If you think about it, as time goes on, as every tick gets added to the chart, every bar gets added to the chart, you get more and more information. So on the open of bar 1, it's really hard to say, and you can use higher time frame context, the daily chart, or other higher time frame charts to have an idea for what the day might look like. But to really have a good idea for what the day structure for today will be by the close of bar 1 or the open of the day, it's really difficult to know. But once you get 50 bars into the day, it's a lot more information. You can start to build a picture, build an image, and think in terms of probabilities. What's the day so far today? To me, it looks like a bear channel, and it's a broad bear channel because bulls can buy with stops and make money. The swings are big swings down, big swings up, back and forth. Stop order bulls make money. So this is a broad bear channel. At this point in the day, that tells us that the day structure at the end of the day today will probably be either a broad bear channel or a trading range day. And how do we know that? Because it's been a bear channel all day, and because bear channels evolve into, or I should say all channels usually evolve into trading ranges. So it's unlikely we get a bear breakout and a huge sell-off below this bear channel. So at this point in the day, it's likely to be a broad bear channel or a trading range. And that's good information to know, because you get a rally to 52 and you think, wait a minute, if this is a broad bear channel, we could test all the way back up to the trend line. And if it's a trading range day, we could test all the way back up to the high of the day. And it might be low probability. Maybe the high of the range is 74 yesterday. It's low probability at this point, but this is a strong enough bull breakout for a second leg. And the context is pretty good. Like I said, there's lots of reasons to look to buy here. There's a lot of support. And this rally just increases the probability for the bulls. So strong enough rally, probably buyers below, and second leg up, likely. 49 was a bad stop order. 50 is an inside bar, and traders are trapped 51, 52. So 49 high, probably support if we get back there. There's also the 50% pullback. Which is the purple line. So there might be support somewhere between these prices, the 49 high and the 50% pullback. And we can see what happened on 54. We tested that breakout point, and then we rallied again, 55. 55, strong enough breakout for a second leg, and tight enough bull channel. This entire rally could be a breakout. It is a breakout on a higher time frame. And there hasn't been a technical pullback here, even though we fell below 53. On the 5-minute, there has not been a pullback on the 15-minute chart. This is still a breakout. So now, strong enough rally to 57, second leg up likely. First reversal down, probably minor. And there are prices that are of interest to be tested. The bear breakout 30 trapped traders in this area. 27 close, 27 high. The high of the day and the high of this trading range, 74 high yesterday. We've remained in this tight bull channel. You can see a reaction there at the close of 27. We broke above it, 63. Looks like we still have to go higher, and we vacuumed all the way up to the top of the range. Now, is this a major trend reversal, and is this the start of a strong bull trend? I don't know. Probably not, because when you look to the left, does this look like a bull trend on this chart, or does it look like a trading range? To me, it looks like a trading range, and it might be a bull trend that breaks out above this trading range, but let's wait for more information and see what happens at the high. We can already see the bulls attempted to break out, and they failed. We can also see that it might be 1, 2, 3 pushes up, so minor reversal likely. This is a parabolic wedge. It's a breakout on a higher time frame, and it's more likely that this three-legged move up leads to a minor reversal and then a second leg up. But then we got this breakout down to 71. And if we think about what happened, and I like to think through the stop orders to give me an idea for what the market might do and market reactions, market behavior to certain events. This was a deep enough pullback. It's a trendline break, and it's disappointing. It's trapping traders. Bulls who bought up here are now losing money. Bears who did not sell missed a profitable short trade. This creates resistance above. So the stop orders I want to pay attention to, this one, bar 67, it's a high one. We triggered the buy, and then we trapped traders and fell. And then we tested a breakout point. Bar 61, weak stop order signal bar, but we still triggered the buy and rallied. So what traders might do is you buy above 67, you're trapped, you buy more above 61, and you look to exit at your average price. And we can see 74 looks like it tested that area. That's one way to look at it. That's the way I look at it. So because of that, now we have big up, big down. Bulls expected to get a second leg, but now the bears also expected to get a second leg. And typically the more recent information, the newer breakout, gets their second leg first. So big rally, but we might need to sit through a big complex pullback. If you're long, stop way down here. You might have to sit through a deeper pullback than you want. And this bear breakout might get a second leg down because the bulls who bought here and scaled in may have used 74 to just exit the trade at break even at their average price. In this case, it looks like something like that happened, sort of a give up breakout down to 78, but now 2 legs down, testing support. There's a breakout point here. Spike, implied pullback, channel, probably support 56 low. So buyers in this area, we can see a bounce, but this still might be enough for a third leg down. But that was it for the regular trading hours today. That's going to be it for the recap today. Thanks everybody for watching, and I hope everyone has a good night.